Sometimes it's not how you trade, but what you're actually holding that can actually make you quite wealthy over time. Stay with me here. So I call this video the US dollar, and it's not really a video completely on trading the United States dollar. We have gone over this already quite a bit, but the United States dollar does tie into a lot of what we're going to talk about today. Now, we've been hitting things from a technical analysis standpoint really hard lately, and so this week we're going to take a little bit of a step back and not get into the technical analysis aspect of things as much. This is almost just kind of more of us just hanging out like at a bar somewhere, talking shop, and talking about the overall future of where we see the economic world going and how the dollar is going to play a part. Because there's no doubt that it's going to. But the problem I always have is I've sat at tables like this with people like this, and it's a bunch of even financial people that have no clue what the future brings. They all listen to the same news sources, and it's just all people like that talking to each other. It's brutal. So let's do this instead. Since I am amongst my people, take some time, pour yourself a drink here, light up, do whatever you want to do, and let's, for the next half hour, just kind of sit back and talk shop for a bit. Because your financial future and mine too both go way beyond Forex trading. So in this video, what we're going to do, I still need to go over a few things and clarify my stance on the United States dollar from a technical standpoint. There's still people asking a lot of questions, and I would just like to go ahead and address them here, and hopefully I won't get those questions anymore. We'll see. But we're also going to talk about the future because the future is important, and like I said, it goes beyond Forex. And because the theme of this video overall is the United States dollar, I really want to talk about my own prediction about the future and how the dollar is going to play a major part in this whole puzzle. I think a lot of you have your own opinions on this as well. Feel free to leave those in the comments section, and we'll have a nice little back and forth. But what we know by now from a technical analysis standpoint, so this is a bit of a review in terms of the dollar. It is the most difficult currency to trade, in my opinion, and I've given my reasons why. The big banks play a very large part in manipulating it because most Forex traders, for whatever reason, love trading currency pairs that involve the United States dollar. And so that's where most of the money is sitting, that's where the most of the money is there for the taking, and that's where the banks want to be. Now, the dollar often drives the bus. We've talked about this before. You always trade currency pairs, which means you trade one against the other. One of those, especially from a news standpoint, is going to have more going on. And typically, whichever currency that is going to be the bigger determinant. Is that a word? It's going to be a bigger factor in whether that currency pair goes up or down. And this responsibility often falls on the United States dollar because of what we just talked about. The banks want to be a part of it. News plays a big part. Things like trade wars, anything the United States is involved in typically affects the rest of the world. And so often it just matters more. Now, the other two things that go beyond technical analysis, as far as the dollar goes, is the fact that it is a safe haven currency. So when things go bad, people typically flock to it. I don't know if it's going to be this way forever. We will talk about that. And it is the world's reserve currency. Almost every major player in the world uses the United States dollar in some capacity and holds the United States dollar in some capacity. And it's for this reason right here. It's their very own hedge. So their entire financial system doesn't fall apart. But we'll be talking about that more in a minute as well. So, before I start getting out of my zone, out of my area of expertise, which is technical analysis, let's jump into technical analysis one more time and just talk about what we need to know going forward about the United States dollar so I don't have to go back to this later. Trade dollar pairs just like you do any other pair. I went a little scare tactic early on, especially on the euro dollar, saying, look, this is probably the worst pair to trade out of the 28 combinations of the 8 majors. So you just really need to be cautious here. But I didn't say don't trade it. I said go ahead and trade it, but just be cautious with your risk, especially early on, because the deck is stacked against you more here than it is elsewhere. I still think overall, especially if you have some experience under your belt, you should trade it. I think it is definitely a net positive for you. But early on, and especially if you're just beginning, it's okay to get rid of it. And just any other time you see a currency pair with the United States dollar in it, just tread lightly. Get some experience under you, find combinations and systems that work really well no matter what you're trading. And then once you have that, go ahead and trade the USD just like you would anything else. But wait until you get to that point. I do think you owe it to yourself here. Now, I've had people come in and say, well, I do really well on dollar pairs. Good for you. Most people struggle with these, and this is why. Most people completely lose everything when they first start trading Forex because all they want to do is trade dollar pairs. And of course, that's not the reason why they lose everything. Terrible money management and inexperience and everything, factors in. But they're not even, from the start, trading pairs that they have the best chance of winning. And so this is why I put these cautionary tales out there. But definitely trade the dollar. Got it? Okay. Moving on to other things. And moving on to the main theme of this video. So pretty much every video I put out talks about offense and how we can go into this market, and even though we're mitigating our risk, which is kind of defensive, we're still playing offense. We're trying to get into this market and extract as much money as we possibly can from it all the time, over and over again. But defense is equally important in the end, and I really spend no time on this. Offense is what gets people excited. Anytime a brand new technical analysis video comes out, people go nuts over it. But there are financial elements outside of just pure technical trading, because you can get really, really good at offense. You can become one of the best technical traders this world has ever seen. If you don't at least have a base working knowledge of the defensive side of things, it doesn't matter how well you trade. You learned all that cool stuff and spent all that time perfecting your craft when there is a chance that it might all amount to nothing in the end because you ignored the defensive side of things. So understand, I'm going to go deeper into this. I know it might be a little confusing at first, but you have to understand both. Offense is way more exciting, but defense over the years has gotten a lot more exciting to me. Like if we ever run into each other and we start talking, I love talking about the defensive side of the ball. I'm fascinated by it. So what do I mean? Offense, as we know, technical analysis, money management, trade psychology, all the stuff I talk about all the time on my channel to make you the most kick-ass Forex trader you can possibly be. But then what happens when that's done? Well, then the defensive side comes in. Diversifying your money. How do you protect yourself from a major economic downturn? Trading Forex itself is one of those ways. We're going to talk about that. But long term, there are so many other things that you need to be doing and need to be doing right now if you can. Because not only do you not want all of this to be for nothing, but if you can nail the offensive side and the defensive side of things, you can absolutely crush it. This is a force multiplier when it's all said and done. Because no matter what the market is doing, you will be absolutely killing it along the way. We've learned by now, do what rich people do as often as you can, and don't do what poor people do as often as you can. What we're talking about here is one of the major tactics of the rich. And when it comes to the defensive side of the ball, I don't think the majority of you are doing it. I had brought this up in episode 12 of the Forex Q&A podcast. For those of you who don't know me, that's a podcast that I host every Monday. And ever since then, I have not brought it up once. I never talked about it again. And I really think we need to take a break from the actual nuts and bolts of trading and really talk about this. There's no time like the present to talk about something like this right now. But just please understand, before I do this, I need to let everybody know that this is not actual financial advice. I am not licensed to do this. This, as always, is just one person giving their opinion, just like thousands of other YouTube channels out there are doing. I will speak in the way I always speak, to where I say, hey, look, this is what I really advise you do. But in the end, I'm really just telling you what I'm doing. And you can take parts of it, you can take none of it, and just completely go against me. Whatever you feel like doing, you may do. But I think I have really good reasons behind why I take the approach I do to money overall. You know, when the trading's all done, where does my money sit? What does it look like? And why? So you guys know I'm not a big fan of financial news, especially when it comes to trading. I say the less of it you can digest, the better. But after the trading's done, I am interested in what the future holds for the overall course of money and world economics. Because we're all affected by this. You know, how much longer do you plan on living? You know, if it's 5 or 10 or 20 years, you're going to be hit hard by a number of world economic issues that come about in those 5, 10, 20 years. You know, you put in all this work trading and you're starting to make this money now. Do you want to be completely caught off guard by these things, or do you want to be ready for it? Do you want to have a plan of action? And do you want to actually take what is crushing most people and flip it and turn it into a huge advantage? Well, if you do, you need to pay attention to what's going on in the financial world. Now, these are two really tough places to get your news, because they are always bullish on the economy, because they are paid to always be bullish on the economy. Who is paying these people's salaries? Well, the sponsors. Who are the sponsors? Banks, people who sell financial products, brokerage firms. All people that really want whoever is the mouthpiece for the overall financial media to constantly be optimistic no matter what the market's doing. Now, you can still get some good facts and numbers and history from these places, but you're not going to get all of it. There's going to be numbers and theories and facts and things like that that you will never find here. Now, I personally prefer the gold media, the people who are really bullish on gold. And now these people are biased as shit too, all right? They're always bearish on the economy, but they are also coming with real facts, real numbers, and showing how these things tie into the overall history of the financial world and our history. And even though they're super biased too, these are facts and numbers that you will not get here. So if you care about playing defense and you want to be informed, it's important that you draw from both sources. Now, where the hell am I going with this? So, and how does this even tie into the United States dollar? That's the theme of the darn video, right? So we've already talked about the technical aspects of it. These two below that we've mentioned earlier are the fundamental aspects of it. When we're playing defense, these two mean a lot to us. Holding United States dollars in some capacity has always been a good idea for businesses, for entire countries, and for individuals. I can just speak for Americans. We don't even think of diversifying our Forex portfolio. I'm sure other countries do, but we don't, and we've gotten very lucky because we have got such a free ride for such a long time. We have never had to deal with a hardcore currency devaluation. And my long-term prediction is that we might be in for one, because I don't think these two things are going to be things for too much longer. So let's talk about that, because it's important that we do, because these things might be coming into play very soon, because as we all know, because it always happens, there's a recession coming. Omar's coming, and it's just a matter of time. Everybody has this recency bias, and because it's been so long since we can remember the last time we had a recession, we just like all of a sudden don't think there's going to be one anymore. Well, they happen all the time. They need to happen for the overall health of the economy, and they are cyclical, meaning they always come around. This is a list since the 1950s of all the recessions that we have had in the United States. The number in parentheses is the amount of years that have passed in between one to the other. So the longest one we've seen was the dot-com crash. You know, we went through almost all the 90s without one, and then we had one in 2001. And then everything else, all the other recessions have happened in a much shorter period of time. And here we are, sitting here 10 years in, and we have not had one yet. The longer we wait, the worse it's going to be. And I don't want to get into this part too much because it's going to make the video go super long. I could talk about this for a while. But we are doing, in the United States, everything we can to make this bubble bigger and bigger and bigger. And when it pops, has a real chance of being absolutely catastrophic. And maybe it'll happen that way. Maybe it won't. But I just want to be covered either way. Because I am very confident betting on things that always freaking happen. And recessions do. And for those of you outside the United States, you know that when these recessions happen, the entire world feels it. The ripple effect can be very great. And I don't want any of you to get hit by this. So we need to start protecting ourselves now. Now, one of the things I mentioned back in episode 12 of the podcast is, and this is great news for all of you, is that Forex trading is recession-proof. All right? Fiat currencies have no intrinsic value, and you're trading one against the other. So one's going to go up, one's going to go down no matter what happens. Market conditions, good or bad, have really nothing to do with it. It might affect whether your pair goes up or down, but you can profit no matter which way it's going, especially if you know what you're doing. That's what this channel is all about. Now, this is awesome. Almost no other market is this way. This is something that is very unique to us in a lot of ways. But just because your trading is recession-proof doesn't mean you are. So let's just say that you have all this great stuff going on from a financial standpoint. So you feel like you're covered. I mean, if stocks go down, bonds go up, right? You know, Forex is recession-proof. No matter what the market does, you feel like you're safe because you have all this great stuff going on. And let's say you live in the United States and you're doing all these things. Now, this is certainly more than most people have going on, so you're very fortunate. And you're covered pretty well across the board as far as what you're actually doing. And this is always a good idea. Multiple streams of income, diversification, really important. But you're not as diversified as you think here, and you're actually in pretty big danger, believe it or not. Because, does anybody know the reason why? Those of you who didn't listen to the episode of the podcast where I talked about this, all of these things have one major thing in common, and if that major thing starts to suck, you're in trouble. You know what it is. The one way you get paid from all of these things. You could have all these things going on, and they're doing really well. But if they all funnel down into one currency, and for some reason that currency falls apart, you're fucked. We've just been so spoiled in the United States that in our lifetime, we cannot remember any point in time where our currency had any reason to be devalued in any way. You know, it's gone up and down like any currency has, but it never really went down sharply to the point to where there was major concern over a long period of time. But I personally think that run is slowly coming to an end, and it might not even be slowly. Because look, over time, the United States used to just run the table in terms of production and finance and everything. And it's just not that way anymore. And we've still enjoyed having the strongest currency, the reserve currency, but there's a lot less of a need for that now because the scales have all evened out. And recently, you know, in the last 10, 15 years, we have run into situations where because this is now the case, things have gotten pretty hairy with our economy and our overall currency. And what do we do when these things happen? We just print more money. I think we're like the only country that does this. It's called quantitative easing. If you ever hear it, actually I have heard other countries do this, but nobody abuses this the way we do. We hit the print button every time something goes wrong. And if this sounds disturbing and ridiculous, it's because it is. And we step 1 foot closer to the edge of the cliff every time we do this. And when it finally does catch up with us, it's going to be really bad. But we still have this safety net of being that reserve currency for now. Because we have wielded all this power for so long, we have used that power to get our way. Now look, I'm not saying we're a bunch of assholes. You know, we have a huge responsibility of having to physically protect lots and lots of countries around the world. That is a horrible and expensive burden to have. But at the same time, we have bullied countries, we have sanctioned countries, and after a while, countries just get sick of it. And if there's anything they can do to even the score and not always have to be in this position of weakness anymore, they're going to try it. And doing it from a military standpoint is not a great idea. There's a lot of risk involved there. But why not, if you could, make some bold moves so over the course of time you can even the score from a financial standpoint instead? It's a pretty gangster little move, and we're going to talk about it. But first, I want to go back to that episode 12, because this is how it all applies to you. In a very uncertain, changing world, how can you protect yourself from things going downhill fast? Even if you think there's not a great chance of this happening, regardless of whether you agree with me or disagree with me, let's all agree that we all need to make sure we are covered no matter what happens. And this is how you do that. First off, play real-life Forex trading. Hold other currencies, like physically. It doesn't matter how well you're doing in life or how diversified your portfolio is if you're just getting paid out in one freaking currency. That's ridiculous. Have others. I don't know if this is just an American thing or not. Like most of my Canadian friends also understand that that they should also hold dollars and things like that. But I never really talked to a whole lot of people across the globe about this, and I wonder if it's the same. I wonder if people in Malaysia just mainly hold ringgits. Is that a thing? But I know in the United States, because we've had it so good for so long, we don't even think to do this. And that's why it's such a surprise to people when I bring it up. But we should all find some currencies that we are long-term bullish on especially, and hold them alongside our home currency just in case things go south. And you can always hold metals too. Gold is great to hold. We're going to talk about that in a bit. But silver is actually probably has more upside than gold does, and it's way cheaper. And I'm going to talk about this soon. I think the downside for metals overall is very small. So, but even though the upside is not tremendous, this is almost kind of like in the crypto world what you would look at as your stable coins. They're not exciting, but you definitely want to have them just in case shit completely goes sideways. Now, as far as crypto goes, I'm bullish on crypto. I had the idea to take a few different coins and buy a decent amount of them, not spend a whole lot of money on it, but the upside's so freaking tremendous that, why wouldn't you not put a little bit down? And then they took off, and I missed my chance. And so I'm kind of waiting for it to come back down. Famous last words, I know. But if this is actually going to be the way money is transacted in the future, whether you believe it is or not, the upside is so high and the downside is so low, you have to give it a look. But by doing these three things, and even just these three things, you can always make sure you are covered no matter what, and do it with very nominal downside, which we're going to talk about too. Now, I also said in that episode, what are the currencies that I'm actually holding? I was very transparent about it. United States dollar, of course, but I also had some Swiss francs, and I also had some Chinese yuan. Now, this has changed since I shot the episode. And in a bit, I'm going to show you what my overall currency portfolio looks like now. But the reasons I was holding these currencies in the first place, well, dollar because it's my home currency, but Swiss franc I love. I mean, their commitment to neutrality and banking is just unparalleled. I don't know why you wouldn't want to hold a currency like that. It's just at least as a hedge. I mean, it does go up and down, but just from a long-term fundamental standpoint, you gotta love Swiss franc. And then Chinese yuan, just because I like them going forward. I know that they're going to run into some really big problems really soon, because just like the United States and recessions, you kind of have to, so things can get stronger later. But I do like them long term, but I did take some of the money that I put into yuan and I put them into some other currencies just to be covered even more. Now, I had to decide what those currencies were going to be. So I know you guys all have your opinions. I'm going to share mine and we can talk about this. And so I had to make a decision. Now, what am I looking for in a currency that I want to hang on to and that I'm going to be overall bullish on? Because I want to spread myself out, but I also want these currencies to get stronger. I mean, who wouldn't want that? So what I'm looking for is countries that right now who just overall get it and who are moving in the right direction. You know, where do rich people want to be? Where do companies want to be right now? And then on the flip side of that, where are these people moving away from? Because it's happening. You know, companies right now and rich people are moving away from Western countries. They don't want the high taxes, and they'll put up with the high tax as long as it's a great place to live. And some of these countries are no longer great places to live in the eyes of these people, so they're moving. Where are they moving? They're going to go somewhere probably where there's less tax, a better business climate, a place that's up and coming. And I know you see it. Right here, they will generally avoid places whose governments have liberal policies or liberal governments in place. We stay politically agnostic here at No Nonsense Forex. But when it comes to where to put your money, it's traditionally not been a great idea to put it in countries that fall under this category. Liberal policies can be great for other reasons, but just typically not money and investments. And so these are the two main things that I'm looking for overall. So let's just go currency by currency, and let's see which ones I took and which ones I eliminated. Because I've heard you guys talk a lot about these currencies too. Everybody's got opinions, so let's talk about them. First one, the euro. No. There are very few countries that I think even want to join the European Union anymore. There are many more countries that are interested in leaving. So this is not a place that I would want my money, and most people I talk to who live in the European Union feel the same way. Pound, I just don't think there's a whole lot to get excited about here. I don't think the downside is as tremendous as people are making it out to be, but I just don't have a whole lot of reasons to put my money here for any real reason long term. Aussies, definitely not. China's slowing down. Housing market's bad. If you think we're overdue for a recession in the States, Australia is long, long, long overdue. And a lot of economic indicators, ones that, like I said before, you don't see on the major financial networks. You have to go to some of the more alternative media networks to get those numbers, really don't paint a pretty picture here. So no to the Aussie for sure. Kiwi elected a socialist in New Zealand not too long ago, so that doesn't really bode well. Now, that being said, the Kiwi hasn't gotten super weak as a result. So I think that says a lot about the overall health of the economy there and the currency itself, but not really something I would look to put my money into right now. Maybe, monitor it and then 5 years down the road, take a look at it maybe again. Canadian dollar, definitely not. And most Canadians will agree, especially with the political climate there now. It is not very pro-money, and things are not looking good. Yen, no. N-O. Would not touch this currency with a 10-foot pole. And if I'm wrong, I'm wrong. But like I said, I don't want this thing going an hour and a half, so I'm not going to go into all the reasons why I don't like the yen, but not where I am going to have my money. So that's pretty much all of the major currencies that aren't the United States dollar or the Swiss franc. So where did my money actually end up going? Like I said, this is just me. You guys do your research and make the moves that are right for you. But still United States dollar, still Swiss franc, still kept some of the yuan, but I just have less of it now. And I put the money that I had in the yuan, split it in half, and took that half and put it into Russian rubles and some other smaller countries that I don't talk about. You guys got to do your own research here. There's some up-and-comers that I'm pretty bullish on, and I just took a chance and said, let's buy some of their currencies and see what happens because I like what they're doing. But Russia is the new player to the game. I like what they're doing, and this all ties into what I've been meaning to talk about for the entirety of this video. I really do think that, and this is a prediction, but it's my prediction, it's what I'm going with, that the overall power in the world is going to shift east in our lifetime, and probably sooner than later, and I think a lot of it is already happening. One of the main things that we have seen Russia and China and India and places like that do is buy precious metals. Russia is all over it. There is a huge gold buying program going on in Russia right now. Same in China and same in quite a few other countries. In the last probably 2 years, you have seen huge spikes in precious metals buying from these countries right here. India more so on the silver side, but Russia, China, Iran, Azerbaijan, other countries I'm not even thinking of right now that are in Asia have really upped their gold intake into their central reserves. Now, this is a pretty costly thing to do. So why would you do this as a large country, invest so much into a precious metal? Well, it has intrinsic value. Currency does not. Or fiat currency, I should say, does not. So it can only go down so much, and it's probably not going to go down very much at all because the supply, I mean, they haven't found a huge supply of gold anywhere for like the last 30 years. And on top of that is when there is a recession, which China and America are both up to bat, any day now, you get to pretty much sit there and just watch the world burn, because if there's a currency war, or if currencies just completely get devalued as a result of a really, really bad economic downturn, you're in a good place because you're not invested in any of it when you're heavily invested into precious metals. So not only are you safe, there's a really good chance that you could come out smelling like a rose. There's a good chance you could come out as a king, as an individual. But as a country, if things line up the way they expect, this is a phenomenal and brilliant way to have the overall world power shift in your direction in a fairly short amount of time. So if entire world economic powers are doing this, why shouldn't I? When really, really rich people and pretty rich entire countries with more money than we'll ever see are making moves like this, all at the same time, do you really think the price of metals is going to tank overall? It would take one heck of a reason to convince me that holding metals in any capacity is a bad idea. And most people, regardless of their income, can do this. Because silver, as it stands now, is less than $15 an ounce. Now, I'm going to show you later on in 2019 how to actually trade these. But as far as a long-term buy and hold, there is never a real bad time to own these when the prices come down like it has. And when major economic superpowers are pushing so many of their chips into the gold pile. I am on board. And like I said before, I am also on board with crypto. I just haven't put down a good amount of money here. Now, everybody has their own ideas on where this thing's going to go. There has really been no history behind this, so anything anybody says is just a random opinion. Even the smartest crypto guy doesn't really know where it's going to go. It's nothing more than a guess in the end. But what I really do like about crypto is the high upside and limited downside. Now, downside, it can go all the way to zero. I get that. But I'm not putting a whole lot of money on this. I'm just putting some money to cover myself because the upside is so crazy. And above anything, it's just diversification. So it provides you limited downside just in itself, just by having it. If everything else becomes a dinosaur and this is the new way that money is transacted, you're going to want to be on board now as opposed to later. And I'm okay with that. I'll take the chance. And so I'm overall really thumbs up on crypto, even though I don't have a lot right now. But as part of my own diversification plan, I want to have some of this too. I mean, just imagine having different currencies, metals, and crypto. You're so covered. The upside can be crazy, and the downside can be pretty darn small. I take this approach to my Forex trading, as you guys know, and I absolutely apply this idea to my long-term plan. So the upside of doing things this way is you're always protected no matter what happens. And on the upside, you can come out like hugely on top in a very short amount of time, like 1 or 2 years, once the dust settles. Because you not only protected yourself, which most people don't do, but you actually put your money in things that go up when things go bad. And since we know things go bad in cycles, we know it's about to happen. It's just a matter of when. So if you can start protecting yourself now, when it does happen, you can pounce on this opportunity. And then since we also know recessions only happen for about 1 or 2 years, once it's over, you can do what smart rich people do and swoop in and buy all these things on the cheap later on. Buy things like stock and real estate near the bottom. Most people aren't able to do this because the recession crushed them. Things like this are exactly how you completely change your own economic situation in a very short amount of time. And the downside, it's not really a whole lot. I mean, when you're covered the way you are here, it can't all go down. I mean, okay, maybe if like this crazy currency war happens and the Korean won was the right answer, and if you weren't in that, you're screwed. Okay, maybe that's the situation. And if that was a situation, it wouldn't matter what you do. We'd all crash. But if you have 8 or 10 different financial instruments in your possession and one of them goes down, chances are another one of them is going to go up to mitigate that. And if you're smart and you do your homework and you pay attention, the chances of any of those things going down also drop tremendously. It's the best of everything, traders, and I really hope it works for me. I've done a lot of work and research into this, and I hope it can also happen for you regardless of which way you decide to go. So in conclusion, just be diversified in real life outside of Forex trading, because I don't want to show you all this and have you become an amazing Forex trader only to have it amount to nothing in the end. How horrible would that be? Cover your ass and do it by finding things that go up even in a down market and combining those things with other currencies and other instruments that just make sense to you. And do it as soon as you can. We don't know when this recession is going to hit, but it could be soon. You don't know. Nobody does. But all I know is we're due. We're overdue at this point. So even if you don't have a lot to invest with right now, at least get some money somewhere else just in case. Because defense is just as important as offense. You have spent all this time learning my material to play offense, but what have you done on defense? Have you done anything? It's time to make a move. The time is now. But just make sure it's your own move, because I am not a licensed financial advisor. Please don't forget that. Also, don't forget to hit subscribe and hit the bell if you haven't already. This video was a much needed break, I think, from the hardcore technical analysis stuff that we normally cover, but we are jumping right back into the technical analysis stuff next week. So yeah, this channel is mostly me teaching people how to trade Forex. It's normally not stuff like this, but I certainly think there's a time and place for it, and that time and place is right now. I mean, my greatest wish for you at this point is for all of you to be able to put some of these plans in motion right now. So 5 years from now, we can all come back, sit down at the table, and just talk about how we absolutely murdered it. Sound good to you? Well, go get it.